one company that has actually managed to meet street expectations and has posted a decent set of numbers. We have Mr. Rakesh Biyani, Joint MD of Future Retail, joining us. Sir, your EBITDA managed to grow about 48%. There was margin expansion, about 25% growth on the top line. Can you walk us through some of the factors that were, active during the quarter and how you're seeing this year play out?
I think, the results are being quite consistent over the last 3 quarters. I think there's more to do with all the work that we've been doing over the last 2 years on assortment and, really optimizing our inventory, optimizing our supply chain. The assortment is now become more relevant. The use of a lot of this is due to the significant amount of data utilization that we're doing from our loyalty database. So the connect with the consumer is becoming stronger, and not only has the margin improved, but the growth in sales and specifically the SSG growth, the like-for-like growth, have been continuing to be strong for the last 2 quarters in a row now.
Can you give us that number, Mr. Biyani? Can you give us the same-store sales growth number?
So for Big Bazaar, it's been 15.3%. That is where the same-store sales growth has been. That's the same number that we have been doing for the last 3 quarters now in a row. So I think the business has evolved quite well and it's become a lot more consistent. And then that's the reason the impact that you're seeing in a significant amount of growth in the EBITDA that we've been able to deliver.
Okay. Mr. Biyani, your inventory has been optimized to 80 days in FY17 versus 85 days in FY16. And secondly, your working capital too has come down by 30-35% as of March. On both these parameters, because earlier they were a concern with the analysts, if you could give us some guidance for FY18 on working capital debt as well as your inventory days.
I think the key lies is to continue the consistent performance in terms of same-store growth, and I think currently the trend is quite similar. So my gut feel is the fact that we would be as we start utilizing more of the data and as we are rationalizing our assortment, which is a continuous process. In the coming year, we could definitely end up seeing an improvement similar to what we've been able to deliver in the last 12 months, or it could be slightly better also. So I think it's a clear case for us that we need to optimize our working capital even further. There is definite more scope to do this. But I think the first focus is really ensuring the fact that we continue to maintain our growth, for which we would focus on ensuring the fact that, I think the new facilities that we've been able to create at in Nagpur for our distribution center is only going to help us ensure the fact that our inventory levels are further optimized and our sales growth at
But any numbers on that? Can it come down to 7 on inventory days? Can it come down to 70? Can it come down to 70?
I think there is definitely a scope of doing another 1 week or so.
1 week or so, 7 days on that. Okay.
A bit more on the margins, Mr. Biyani. This number of around 4% odd, can you maintain this? Are you hoping to improve this? And the role that your in-house brands are going to play in the way the margin trajectory plays out. So if you could just tell us what's the contribution of in-house brands to sales at the end of 4th quarter and how you see that shaping up in the near future.
So on the in-house brand, again, depending on the categories, the performance is been quite high. Now, the apparel category, of course, now is almost 95% in-house brand. And when it comes to the home category, that number is now exceeding about 34%. On food, we are almost at about 32-33% now. So the trajectory is, in-house brand. I think again here there's a focus in terms of premiumization of the assortment, which has also worked very well. The kind of ticket size growth that we've seen reflects the fact that our assortment strategy is connecting with the customers. So I think that's a direction that we will continue to build on as we go forward.
Rakesh, I'm trying to pin you down to numbers, but back to the same-store sales growth. You said 15.3% for Big Bazaar. On an overall basis in Q4, it was about 13.3% in terms of your same-store sales growth. It's been hovering around that level for the last 3 quarters. With a focus on growth, can we expect this same-store sales growth on an overall basis to cross 15% in FY18? Is that the target that you're working with? And how will GST in the near term impact performance, and for how long?
So there are two things. Yes, the target would be to continue at the current level for the overall company. So which would be 15% is a reasonable number to consider for the growth on a like-for-like basis, and another about 7 to 9% coming out of new store openings. So that is the kind of growth that we have envisaged for ourselves for 2017-18. As far as GST goes, clearly for most of the categories, announcements have happened. Quite a lot of cases, we are currently working with our vendors and brand partners to figure out as to how do we will create a transition plan around it. There are going to be areas where there will be savings and prices would get reduced, and these are something that we are looking to pass forward to the customers effective 1st of July. And there are some areas where there are still concerns in terms of the tax rates have not been defined, specifically on textiles, which is a significant share of our business. And I think we have to wait for where the government goes. There are concerns around the fact that, maybe the government approaches it on a level which is branded and unbranded, which in the past has not worked for the industry. It's actually very difficult to say what is branded and unbranded. Brands have to be created because that's the model in which you really drive traffic to your stores. So I just hope the fact that there is a tremendous potential in terms of growth in the fashion business in the country. Bulk of it is anyway produced in India. India has a huge manufacturing capacity on textiles, and the industry has reached out to the government seeking a simple GST regime on the entire textile industry, which is easier to implement. It's been one of the most difficult categories to tax in India for a very long time. So the request from the industry has been to get the tax rate at about 5% across the entire industry, which would ensure the fact that a large chunk of the industry, which is currently not taxed at all, would start participating in the GST regime. So we have to now, of course, wait till the 3rd of June, which is when the government is going to announce the approach that they will take. But I just hope the fact that we will approach it in a more simpler manner in line with the whole objective of GST. I think the real objective needs to be to drive larger compliance on GST. So I think overall GST is likely to be very positive. We are on the forefront. We are completely ready for rolling out GST. Our supply chain is fully geared for that purpose, and so are our technology platforms to participate in the GST.
All right, Rakesh, we'll leave it on that note. Thanks for joining in. And yes, let's see what kind of clarity we get on branded, unbranded apparel, textiles, all of that happening on the 3rd of June.